Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to Trading Tips with ForexAnalytix. Today's video is going to be on finding support and resistance levels and how you can maximize your profit potential and reduce risk by simply identifying where support and resistance is at in the markets. It's probably one of the oldest ways to trade the market, but probably one of the more effective ways to trade the market. You know, out of all the years that I've been trading, some of the best traders that I've ever traded with, hands down, they just want to know where's support, where's resistance. I know what to do from there. Do you? So if you want to figure out how I use it, stick around and I'll see you on the trading desk. Hello traders, this is Blake and welcome back to the desk. We're going to talk about support and resistance and how you can use this information to help maximize your profits, reduce risk, and more importantly, just learn how to identify it. Because like I said, this is one of the oldest ways, probably the most basic ways to analyze the market, but you got to know how to do it. So we're going to talk about support and resistance and we're going to take you over to the trading view charts. And before I actually get into the charts themselves, I want to talk a little bit about a good rule of thumb. Okay, so this is a good rule of thumb when you're talking about support and resistance, or really any chart pattern for that matter. The older the chart is, the more respect you should give it. So you should always write that, down and always remember that. Okay, it's kind of like a human being. If I meet somebody who is a little older, that means they're probably a little bit more wise. I'm going to listen to what they have to say. And when you're looking at a chart, when you're looking at a daily chart, or perhaps a weekly chart, or even a monthly chart, you're going to give those support and resistance levels a little bit more respect because they've been around a little longer than the shorter term ones. So I hope that made sense to you. That's a good rule of thumb. Rule of thumb number one. All right. Now, the question is, how do you find support and resistance levels and why does it even matter to us? Well, support and resistance, as I've often said to you guys, is not an exact science. Okay, I look for zones in the marketplace. So when you are looking for support and resistance levels, you're basically looking at, the highest price that an instrument has been to or the lowest price an instrument has gone to. And whenever they get to these levels, okay, they become significant because that means this instrument, whether you're looking at stocks or a currency or bonds or whatever you're trading, whenever they reach these levels, they tend to struggle to get above them or struggle to get below them. And that means that if it's coming down to a level where buyers keep stepping in, that's going to be support. Okay. And when you get to levels where you keep finding sellers, that's going to be resistance. Now you'll notice that I have a couple of different lines set up. That's because support and resistance is not an exact science. It's not. You look for zones in the market. So I tend to look for the highest price, the lowest price of different time intervals, or in this case, different candles. So every time these candles reach a certain level, I'll draw a support and resistance. And when we get a few of those drawn out, you can see that they become what we call zones. Right? You can see that. So every time we reach the zone, and we happen to be in the middle of the zone, but every time we reach for the upper end of the zone, we tend to find sellers. And then we get down here, we get to the lower end, we tend to find buyers. So for us as traders, what we are doing is we're looking for the best opportunity that's going to provide us the least amount of risk or the least amount of loss and the maximum amount of reward, or the maximum amount of profit. And that's why finding ranges in the market, the levels of support and resistance that continue to contain price, that's going to allow us to find the best risk versus reward. At some point, these ranges end up breaking. And when they do, you end up taking a loss if you're trading inside of the range. But while you're in the range, there's multiple ways you can make money before you take a loss once it pops out of the range. I hope that makes sense to you guys. So I'm going to go ahead and delete this. I'm going to redraw these support and resistance levels and these ranges for you. Okay, so you can kind of see them. And let's talk about it a little slower. So when a currency pair, or an instrument rather, gets to a support or resistance level, or a zone, excuse me, we want to use that area to look for, in this case, like if the Australian dollar, it happens to be the instrument I'm looking at, reaches this level, we might want to take on a short, which means our risk is above this zone, and we're looking to make the money back down into the lower end of the zone, or the lower end of the range. So if you say, okay, well, I'm willing to risk, let's do this way. If I'm willing to risk $1, I might be looking to make 3. And you know what? When I trade, taking a risk reward like that, I'll do it all day long. I'll be willing to risk $1 to make 3 every time. Okay, let's do it the opposite. Okay, let me remove that. Let's remove this. Let's try that again. But let's go the opposite direction. So let's say this instrument, which happens to be the Aussie dollar, drops back down towards support, and we get down here and we look like we're finding some support. Okay, you might be willing to risk at that point $1 to make 3 or 4. Again, willing to do that any day of the week. So whenever you can find good support levels that hold and good resistance levels that hold these ranges, you find a lot of traders trading inside of that range. And a little factoid with the markets tend to range more often than they trend. Some people will say they range 75 to 85% of the time, and they're trending 15 to 25% of the time. Well, if they're ranging more often than they're trending, then we have more opportunities to trade inside of the range. Now, one last concept I want to bring to your attention, or teach you really quick today, is this. Support and resistance, once you find them, once they're broken, those rules are reversed. So, a good example would be right here. Now, let's zoom in a little bit. Let me explain that concept to you. When resistance is broken, once resistance breaks, that resistance now is support, right? So you can see how we went up, we stopped, we came back down, and we bounced from that previous resistance, now acts as current support, okay? So once again, we broke through that support, and you'll notice how that support became resistance. Okay, do you see how significant these levels became to the market for that period of time? So remember, support and resistance is not an exact science. We look for ranges. Once support or resistance is broken, those roles become reversed. And one last thing I want you to remember, just to reiterate, the markets tend to range more often than they trend. That's why range trading, or trading between support and resistance levels, becomes very profitable for a lot of traders. Now, I'm gonna help you with one last thing. Let's delete this, and let's zoom out quite a bit. And what you'll notice is you can identify like a longer term trend. Okay, this currency pair tends to be trending up, and it has been for the last year. What that means is when it's trending higher, buying it at support levels tends to be easier than selling, because if it's trending higher, that's the path of least resistance. So whenever it bounces off of support, it tends to act a little bit better, and it's easier to make money when things go back in the direction of the trend. So if you're looking at the Aussie dollar based on where we're at currently, yeah, if we drop back down towards this previous resistance, current support, it's a nice zone of support. It looks like it's been holding for a good year. When you come back down here, that should be a good opportunity to be buying again, going back in the direction of the overall trend or the path of least resistance. So, guys, I hope you've learned a lot from this really short video. If you have, give us a thumbs up. Also, subscribe to the video down below or subscribe to our channel so you don't miss any of these trading tips with ForexAnalytix videos. My name is Blake Morrow. I'm with ForexAnalytix, and I hope you have a great trading day. Thanks for tuning in. I'll see you on the next video.